The broadcast is now starting. All attendees are in listen-only mode.
Hey, good evening. How you guys doing? Dakota, welcome. Farzan, how you doing, bud? Jeff, Jen, Steve, Lou, how you doing? Oh wow, not iguana, man. Adigan, how you doing, buddy? Stacy, Tim, Derek, all right. Devon, how you doing? Greg, Ann, Arnie, wow, Jay, Karen, everybody's here. Good. Glenn, Aaron. Yes, thank you, everybody. Thanks for the well wishes. Yes, I got food poisoning on the last day. I was uh, on vacation with the family in Egypt, and I don't know what happened on the last day. I was actually flying over to India for my friend's engagement because I wouldn't be able to attend his wedding. So I figured I'll just fly over there and attend his engagement, maybe trade for a week or two in India. And let me tell you, that flight going from Egypt to New Delhi was hard. I was absolutely laid out, and yeah, including wheelchairs and everything. It's unreal. So anyway, I'm much more stronger than I was last week. So thanks a lot for a lot of well wishes. A lot of people reached out personally. I appreciate it very much. Yeah, I'm feeling a lot better. I'm feeling a lot better, a lot stronger. Yeah, my hemoglobin count dropped to like 50% of normal. So like any little thing I did, I had to go nap and relax and just couldn't do much of anything. So last week, sorry about the reviews. At every intention, believe me, every intention. You know, I enjoy this stuff, teaching and showing stuff, but every intention of doing it, but just could not physically get out of bed to do it. Anyway, glad to be here. I'm fired up. Let's get going here. Disclaimer as usual, nothing presented in this webinar or video presentation, vocally or visually, is to be taken as trading advice. All content of the video presentation is for educational purposes only. You know, trading involves risk, so always do discretionary funds when trading. All right. So normally what we do is we look at the news. All right. So here we have a lot of very big news. I'll be a little concerned trading today into, so I mean, this is today, like as in trading London today. And then if you look into tomorrow, not much, right? So tomorrow should be a much more easier day to trade London. All right. You have unemployment rate, but today there was a lot of big news, right? You have Bank of England inflation reports. The important one was obviously the monetary policy. All right. Then right after that, 30 minutes later, you got Carney. Okay. And then after that, in the evening, well, not too long from now, is the RBA monetary policy. So pretty much EU economic forecast, important, right? Monetary policy, Carney. Okay. All right. Let's take a look at the harmonics. All right. So I'm looking, so the way it works is you look at a 4 hour, the way Steve taught us, right? A long time ago, Steve was like, all right, so how do you know when the market is going to reverse? A good reversal point of a harmonic, it is the harmonic. So a good reversal point on the 1 hour chart is the 4 hour harmonic. Now, if you line the levels with the harmonic, it'll give you a nice area to look for the patterns, right? So now again, it doesn't always happen. All right. So for example, normally what I do is I go through the harmonics for the week. So here's the harmonic. Right now, understand these harmonics are not like little boxes, right? Sometimes you get little boxes, sometimes you get these huge boxes. These are like 50, 60, 100 pip boxes. So I'm looking for a pattern inside here on the 1 hour chart. So I come in here and I look for my pattern. All right. As you can see, sometimes there is no pattern. All right. So if this harmonic fails, then all you do is just remove the box. That'll happen as well. Okay. Just remove the box because the box has no purpose anymore. All right. So let us look and see where some of this will present. Okay. So here we are, EC. So EC, this actually happened over here where this black box is. That's where we're looking for the pattern approximately. All right. So I go to the 1 hour chart and I'm going to try to find out if they give me a nice pattern right around this black box. So it's not just anywhere and everywhere. Now, there are two ways I use this. One, if I don't see a pattern, a clean pattern in here, then I look for my 1 hour 50 bounce, right? So the pattern can come in a couple of ways, right? Obviously, the cleanest of patterns would be a regular M structure. So let's find one. So here's like a little harmonic-ish structure in here, right? So I'm looking for a pattern. So I'm looking for either a M, W, half a bat, 3 drives, all right? Some sort of a structure. Why is that important? Because the pattern is your reversal pattern, letting you know, hey, I am going to reverse right around this area. Okay? That's why Steve gave us these patterns. Now, sometimes you will see a pattern that's clean. So for example, here is not clean, right? It didn't go above the 13, below, back above, right? Like a normal pattern would look like. All right, double bottoms, you call it, right? So I don't really see it. So what do I do if I don't see it? I'm going to wait for my first pullback, the 1 hour 50 bounce, right? So I'll wait for the 1350 to cross, and I'll wait for that first pullback, and I will definitely nail this trade right here. All right, boom, that'll be my move. All right, I'll be waiting for this move. So if I get a structure here, I'll definitely take it. If I don't, I will use the harmonic as an anchor, and I'll look for my first pullback. Okay, so here is an example. All right, here's an example where here's my little black box. I'm looking for a pattern in here. Okay, now if the pattern is clean, hey, every day I'm going to take it. If the pattern is not clean, I won't take it. Now, of course, there are some advanced patterns, like an advanced W structure, right? Now, the advanced W structure will create the W on TDI, but not on price. All right. Okay, so it'll create the W. Now, ideally, I like this to be out of the band, in the band like this, right? But it didn't do it. It's in the band, but it did create the W. What do I mean? So you notice this catch up is the same as this move right here. Okay. Well, in theory, not reality, right? This is a 13 EMA. This is a average of, it's a moving average, right? So it goes above the red line, right? Comes back below, comes back above. Always prices close above the 13, and RSI got to be above the market baseline. That's the rule. Okay, so it'll create a little W structure, while this one will not. So you can take the trade right here like this, 25 pips. All right. Guess what happens? If you use the 13 above or below to get out, what's the worst case scenario? If you think it's going to go to the moon, but it doesn't, it goes below the 13, you kill this trade, -2. All right. Now, in theory, if the 50-200 is pointing down, your target, first target is water, the second target is Mayo. Okay? Or if it closes below the 13, you're out. Now, if you don't like this move, you're like, yeah, it doesn't look really nice, I don't like it. Okay, cool. You wait for the 1350 to cross, and then you take this trade. All right, now, this is a 1 hour 50 bounce. Sometimes they'll give you one leg and they'll run, like we saw in the previous example. Sometimes it won't. They'll give you 2 legs, right? So you don't, which one are they going to give you? The answer is you don't know. Should I take the first leg? The answer is yes, you should. Why? Because sometimes it'll give you 1 leg and it'll run. How do I know it's going to come back for the second leg? The answer is you do not know. So what do? That's why you go above or below the 13. So you take this trade, right? 1/3 pull back. That's usually where I enter. The minute close below 13, I kill this trade. What do I lose? Nothing. 1 pip. Should I take the second leg? Yes, that's part of the rule. You come in, you hop in. The minute it flips back above, as long as the 13 is above, RSI sig line is crossed, you take the trade. Right? That's it. So the way I personally like to trade is based on rules. I structure it. It's based on a structure. All right. So I'm sure as you guys have come in here to attend the open house, right? A lot of new people here. Welcome, by the way. Uh, you will notice that Jim, myself, Steve, and Doug, we kind of do it Steve style, but with our own twist, right? So that's what Steve calls variation to the theme. And it's important mainly because every person's chart vision is slightly different. All right, mine is more structured. Jim's like the high-low drill and the 1 minute stuff and the faster moving charts. Doug like the larger structures, right? Steve trades in between that. He can trade anything, right? But he prefers intraday trading, shorter time frame, all right? So each person's vision and expertise vary slightly, all right? So it's kind of nice to have one larger structure, which is larger material in place, like Steve's material. And then based on your personality, you choose how it's going to fit with your style of trading, whether you like it fast, the 1 minute, the 5 minute, the 15, the 1 hour, 4 hour, the daily, larger structures, things like that. All right. I've always bring in once a month or once every 2 months guest speakers, and guest speakers are people that, your peers, the people that have joined BTMM that are doing very well, and they want to share their journey on how some of them have full-time jobs, some of them are professionals, and how they're doing. Okay, and it's good to hear that, because it's not always like, oh, I want to hear these instructors teach. It's nice. That's why we have education almost 5 days a week. So Steve comes in when he does his book club and his education, he comes in on a Monday. Jim does Tuesday, Doug does Wednesday, I do Thursday. So Friday, Saturday we have off, and then usually we have a Sunday session. It's called the Car Study Group. It's just more like a study. It's not so much lecture. It's more like, all right, so this week we've had all these setups, so we're just gonna go over the setups. So when Doug does his, he uses his material to go over the material that he does on Sundays. He'll apply his material on the chart that happened the previous week, and you're like, hey, look at all these setups. There were 30, 40 of them every single week. All right. When I teach on Sundays, we will go over the previous week, and we will look at every single setup that happened on the euro and pound crosses. All right. Some people say, well, why don't you start talking about Aussie and New Zealand and all? We try not to. I mean, in the pre-markets I do, but we try not to. Mainly because the ADR is kind of small, right? The style of trading, though, is slightly different. You kind of go for 1-to-1 risk reward or 2-to-1 risk reward. You don't go for a fixed number of pips, because most of the time you're not going to get it. You're going to take scratches on it. Okay? All right, so let's keep moving forward. Otherwise, we'll never get done, right? Okay, so here's another example. You're Aussie. So 4-hour harmonic, 1-hour pattern. So I'm looking for a 1-hour pattern in here, and so ideally I'm looking for what? A close below the 13, back above, back below, or an advanced pattern, or a 3 drives pattern. Now, TDI is our best friend. We love TDI in BTMM, right? So all I'm looking for is ideally an out of the band, in the band move. Now, even though it does an out of the band, in the band move, I can't take the trade until price closes A, below the 13, B, RSI line's got to be below the market baseline. So in this example, price closed right on the 13, right? But if you notice, price closed right on the 13, but RSI line is still above the market baseline. Why? Because that's my rule. Remember, I trade on a base set of rules. All right, so most of you guys are professionals, and you like structure because, I mean, that's what happens when you go to work, right? There's a certain structure at your job, at what you do, and you just kind of follow that, and over time you become really, really good at it. And that's how I became really good at trading, is because I created these structures, I've homeworked it, I've been using it, and over time I've become very proficient at it, and I identify these things while they're happening on the hard right edge, and that's why you're here, right? So this has really helped me with my trading. So I know that if I'm looking to take this trade, price RSI has got to be below the market baseline, right? The yellow line. And I got to have a out of the band, in the band, because that is my anchor, my structure. I'm looking for it, okay? So if this one doesn't qualify, I pass. The next candle closes back above the 13. So even though when this candle closes, RSI goes below the market baseline, I cannot go short on a green candle. That's one part of the rule. You cannot go short on a green candle, because then you're gambling, you're risking, right? And it's not on the right side of the 13. So your best bet is right here when it closes below the 13 and RSI is clearly below the market baseline. That's when you pop that trade. This is an advanced gem structure. All right. Now, if you said, hey, that did close below and this one did not qualify, so that did close below 13, back up or back below, that's even better. That's the real M. Remember, after this little black box here, I'm looking for a structure. So I'm looking to take this trade short from here like this, 50 pips, right? So yes, if I was in line and if I was present, I would take that trade short. Okay. All right. The second column, I don't have any until here, GU. Sometimes I pause it because I'm waiting for the audience view, right, for it to change. So, all right. Let's take a look at this one. So here's this big black box, right? So I'm looking for structure in here, right? So here's my out of the band. Here's my in the band. So when RSI price closed above the 13, here's your structure in advanced W, right? Now, you measure this candle. There are a lot of rules, by the way, right? So the size of the candle, everything takes into place. So over here in BTMM, if the candle is 25 pips or bigger, normally I wait for that pullback and get a discounted entry. So I wait for the 50% pullback for my full position and a third pullback for my smaller position. We call them a foot soldier, right? So this candle qualifies, right? Here's my out of the band. Here's my in the band. RSI is above the signal and above the market baseline. Price did close above 13. I am interested in this trade. Okay, I measure this candle. It's 40 pips or more. Right, it's about 40 pips, right? So my foot soldier, my little position, just in case it runs, is at a 1/3 pullback. I put a pending right here. My full position sitting here. Now, my foot soldier will activate right here. Boom. You've got to activate within 3 candles. Otherwise, I'm just going to remove my pending. All right. So it'll activate right here. Boom, like this. The next candle opens up. It pulls right back up. And then the next candle closes back down, close below the 13. So that means this closed below the 13. That means I am out of this trade. I'm down 3 pips. Right. I remember taking this trade, by the way. I took this trade, right? Down 3 pips. Then it closes back above. Now this makes it theoretically almost half a bat, but this one did not crisscross. So if this one crisscrosses, that means goes below the signal line back above, then I'll have to wait for price to clear the apex right here. If it doesn't, I'll pop this trade right here, which I did. Boom, like that. All right. Now if it goes 17 pips or more, I move my stop to break even. Or again, in this situation, which it did, but if you didn't pop it correctly, then same thing. Price closed below the 13, you're out -5. All right. So I'm expecting this to hit the water, right? So my target is the water. Remember, the 50-200 is pointing down. My first target is water. Second target is Mayo. All right. All right. Some people see a buy on GU right now. I really don't see anything yet. It's kind of sitting. It's nothing's going on. All right. Does it look like a larger structure to go long? It does, kind of market baseline, but not at this present moment. Right. I have no idea it's going to bounce off here and continue down. All right. Okay. So let's move forward. All right. Also look at the market, the timing of the market. What do I mean by that? The timing of the market is crucial because right now it's Asia, right? That means the GBP market is not open, right? So if the GBP market is not open, there's no volume pushing price at that time. So your best bet is kind of to sit back and see what it looks like, right? Would I like it to come back up here and hit the water and roll over and drop? The answer is yeah, sure. Okay. But as of right now, price is on the wrong side of 13. So going long here is a much riskier trade because you don't know, right? Just a quick thing, right? Or if price goes above the 13, it stays above the 13. Remember, these are 4-hour charts. It stays above the 13 for a long period of time. When it goes below, it stays below for a long period of time. What do I mean by long period of time? Think about it. Each candle is 4-hour chart. 4 hours. You got 1, 2, 3, 4, 5, 6, and then on the 7th candle comes back up. That's 28 hours. That's one whole day. So it tends to stay above or below for a long period of time. So notice price stays below the 13 for a long period of time, many hours, until it goes above, right? So when price is below the 13, your better bet is short. When price is above the 13, your better bet is long. Okay? Just a little simple rule. Okay? All right, let's keep moving. Here's another one, GJ. All right? So big pin, go to the 1-hour chart. I'm looking for a pattern. I really don't have one yet. I got one leg. Okay? Sometimes they'll do that. What does that mean? It means I don't have anything. Don't make something out of nothing. All right? We've obviously combined this with the 1-hour harmonics. We call it the 2H, double harmonics, where if both harmonics fire at the same spot, then you go down to the 15 minutes and look for patterns over there. That's for another day and another educational session. Okay? There's tons of material, man. Tons of material in here. All right? Same thing. Boom. This is too quick. You're not going to get a pattern. All right? You're looking for a pattern in this box, approximately. Right? Too fast. Nothing. Okay? Let's see. This is still active, right? So the only active harmonic at the present time is AU. All right? If you go to the 1-hour chart, you're looking for some sort of a pattern. So here you got your out of the band, in the band, and price closed above the 13 right there. Right there. So your entry would have been this pullback going long. Right? 12, 13 pips, and then you got to get out before that Aussie news. Okay? You got to get out before the Aussie news. That's why I do not trade these lower ADR pairs, because theoretically, right? Remember I told you, if you're trading this, you're going to be using risk reward. So if I'm taking this trade right here, my stop is 7 pips. If I went 2-to-1 risk reward, I'd have had almost 14 pips in here. That's how you have to trade these low ADR pairs. They're going 1-to-1, 2-to-1 risk reward. That's it. You will not get your 30, 40, 50 pips on these unless they push it with news, or it'll take forever to give it to you. All right. Okay. All right, we're done with harmonics. Let's move on. All right. Do I drill down to the 15 minutes for entry? The answer is absolutely. All right. Right now, we just touched the surface of what do I talk about normally on a weekly basis, right? So we first come in, we talk about harmonics, looking at anchors, right? Sometimes you'll get some really beautiful stuff, and you're like, wow, this is so easy, and it is. Okay. Now we go to the 1-hour chart, right? This is where I use most of my entries on the 15. All right, I'm an intraday trader, so I use the levels, which is my directional bias, and then I trade in line with that. So for example, see, that's why it's so nice when you get a harmonic sitting here, as well as a pattern, right? So whenever I take a reversal, that means I take a counter move against the 50-200. I always look for the out of the band, in the band move right in here like this, right? So my entry is right here going short. Stop goes right above there, and then I pop that trade. That'll be my move. First target there, second target male. And normally I don't wait for there, okay? Because they kind of mess around and take forever. It does get here, 50 pips, but I don't want to sit there for 2 days with my chart. So normally my first target will be right here, 20 pips, like this, pop, right? That's the classic M structure. Okay. All right. So normally what I would do is I would have already done the pre-market in the morning, right? And then on Thursday evenings, we would go based on, hey, I said the bias is XYZ, and then this is the result of what we think, whether it worked or didn't work, right? So if I was doing the pre-market, I would have said, okay, so price came into a level 3 situation, I'll be looking for a reason to go long. All right. Now, if there were the 1 hour harmonic sitting down here, I would go down to the 15-minute chart and I look for a structure on the 15 minutes, like right down here. All right. So I look for, see, it comes into the stop on box, like Steve talked about, 25 to 50 pips below the Asian box, right? Creates the pattern, and then you look for reason to go long from here like this. Okay. It'll do the same 1 hour or 15 minutes. It'll give you the out of the band and the band move, right? And you're going to get the structure right in here. All right. So the first thing I would do when I come in here, I would measure and see where I'm at. So if I come in here to London, I'm at about 150 something, 152 pips, right? 150 pips. It's about 170 something pips. So I'm expecting price to drop slightly and give me a New York reversal, right? So in here, I'll be looking for a reason to go short first. So I'll come in and I look for this bounce in here. I actually did take this trade, right? I'll wait for this water bounce in here like this. I did not go very heavy in here, and the reason for that because I got a blue tracer sitting right in here and I'm very tight. Okay. This was nice from the previous day. I was looking for that. That's called an AR safety, right? AR safety means AR 50 with the second leg. So I took the short from here like this. And then over here is the water bounce. So we have these rules in place. Jim called it the London pattern. Okay. So he has a London pattern structure in here. I call this particular one is a water bounce for me. Okay. So take this short and I'm done. I did not even have to trade the US session. Traded just London. Boom. 15 pips. I'm done. Right. So my stop goes right above here, and that'll be my move. Mainly because I have not hit 3 times the ADR. Once I hit 3 times the ADR, all bets are off. I'm looking for counter moves. Okay. All right. The stop hunt boxes are in place to look for your reversal. So it gives you an area where you're looking for price. Hey, that's where it might potentially reverse for me. All right. EJ. So I was sitting at level 2. I was looking for a reason to go short. Okay, so I go to 15 minutes. I'm waiting for them to hit the water. All right, and they did. They came in. They hit it with the first leg, right? The water bounce. So if you did take this first trade, your first entry is right here. Your stop goes right above here, 8 pips. Bam, right? I know a lot of people like to trade 1-to-1, 2-to-1 risk reward. Okay, it works. If you went 1-to-1, right? If you had 10 pips here and you went for 10 pips, you hit your TP right away, and you came back for a second leg move. All right. Now, if this touches the outside band, you got out of the band. You can take the out of the band and then wait for the in the band also. You pop them twice. Okay. So when this one closes right here, you got to see where your TDI is. If your TDI is open like this, pointing upwards, don't take that trade. It's not going to work. When this candle closed, our nesting line will pinch. It'll not necessarily cross, but it will pinch. All right, that's why I popped my second. I was not here for this one. I popped this trade right in here. Okay. Is the pre-market the same time? Yeah, it's the same time. When I get back to the US, Steve. Right. The pre-market is and the reason I'm not doing the pre-market in India is mainly because of the bandwidth issues. All right. What tends to happen is more people are obviously not awake at right now. It's around 5 something in the morning, 5:30 in the morning. It's perfect. It's okay for me. I'm used to getting up in the middle of the night to trade in the US anyway, right? But at 1 o'clock in the afternoon, the bandwidth will drop it'll drop down to like less than 1. And that's why I was having issues yesterday. Right? If my upload is less than 1, you're not going to be able to see my screen. It's going to freeze, and then of course Steve is going to not be happy, right, Steve? All right. So where will I take the? Okay, very good question, right? The question was where would my TP be? Where would I take my take profit? Right. 2 ways to handle this, right? So my stop is right here, 12, 13 pips, right? So I'm measuring from here to here is about 13 pips, 1-to-1 risk reward. So in this example, I went for 15. Okay, if you see, it came right around 15. So I popped that trade. I only got a foot soldier in 1%. Okay, my foot soldier is 1%. My pullback entry is 2%. All right. So wherever my TP is on my full position is where my TP is going to be on my foot soldier. Okay. Again, if you haven't noticed, these stop hunt boxes, this is all part of BTMM, right? Once you're a student, I'm sure for those who are, you know, price most of the time will come into this little boxes. So a lot of people will target the top of this box as your TP. Okay. It'll come sometimes very, obviously your entry's right here going short, right? That's an AR move, which I took, right? So my stop will be above my shift candle, 3 to 5 pips above my shift candle. So if my stop is 10 pips, I could easily go for 1-to-1. So most of the time, I will close some positions at 1-to-1, and then I'll let the rest run for 15 pips, especially on the euro pairs. All right. So you can always say, hey, if I get a full position in, so my 1/3 pullback is here, my full position goes, right? My full position, let's say I got a 10 pip stop. I sometimes will go for 10 pips, right? And then I'll let my foot soldier run to 15. Okay. Why? Because I want to book. All right. Like I told you, my chart vision is slightly different. I go for percentage of accounts. And the reason I go for percentage and trade percentage of account is because I want to be able to make percentages. So let's say, for example, you're trading a $50,000 account. And if you're the target, what I expect of BTMM students, what I want my students to accomplish is to hit anywhere between 8 to 10% a week. That's the expectation. And you will be able to hit them. All right. It takes time. It takes energy. It takes persistence. All right. It took me years, man. It took me years to get there. It did not happen overnight. It did not happen in 6 months. It did not happen in a year. It took me years. All right. I mastered one setup at a time. All right. I guarantee that if you put in the work and master 3 setups, you will destroy the market makers. Absolutely destroy it. All right. Because all you're doing is waiting for your set, man. You're waiting for your set. And that's the hardest thing. Your butt is hurting. Your back is hurting. Then you have to make your own standing desk like Doug does. Right? Because you got all this free time. You're sitting there waiting. You got nothing else to do. You might as well make your own standing desk. YouTube is amazing for that. Right? So the expectations initially is 5% a week. I know some of you guys are like, well, 5% a week, that's only 20% a month. That's nothing. It is huge. The S&P 500 rate of return is 8.5% a year over the last, I don't know, since the Great Depression, since they've been keeping record. 8.5% to 9% a year, 1 year. You're doing 20% a month and you're not happy. There's something wrong. All right, and I know what's wrong. It's because you're trading a smaller account. You've been beaten up for a long time, and you're trading a smaller account, and you're like, well, unless I can double a small account, what's the use of trading a larger account? And you're 1,000% correct. There are people in this group, this very group, that are doing 10% a week. And I bring those people in to show you what they're doing. And it's nothing different than what you're already doing. except they've been doing it longer and they're more consistent with it. They stick with us. They stick with the material. They stick with BTMM. And this is the only place where we all speak the same language. All right. I'm sure there are other educations out there. I'm not saying they're bad. I've taken classes with other educators. All good. All right. But what resonates with you is what's important, right? So there are setups in here. There's some London patterns in here that you could take, right? You take the first leg, you don't know because you don't know how to run. You take it. If you're going 1-to-1, you're going to pop, you're going to hit your TP on the first move. If it comes back up and closes above the 13, you kill it. What's the worst case scenario? -2, -3. Your stops are small. So the next question is, should I kill this trade? I do. If I took that trade, that's where I'm going to close my position. Why? I have no idea it's going to come here and hit the stop above the Asian high. I have no idea. Nobody knows. If they tell you they know, they're lying. They don't know. Nobody knows. It's all based on trap volume. I don't know if the market makers have trapped enough volume that they don't need to go above this high and release that trap volume and induce longs. I don't know that. All I know is when they close above there, I'm out. Okay. All right. So that was easy, right? EC. Okay. Right. Level 3. I'm looking for longs coming off this level 3, right? 1350 cross. We talked about this trade. Small scratch or marginal. And then I will definitely look for the second move. Boom. Your next question is, did you take this trade long? The answer is, I missed this. I missed this trade. I was looking for this trade. All right. This, to me, is the classic bounce right here. Market baseline pointing out. Boom. All right. People in this group knows I'll be looking for this trade. All right. You go to now the CAD move in the US session. That's when they prefer to move. Beautiful trade. Come out. Visible stop hunt. Right. Close above the 13, back below, back above. And then you're going long right in here. Stop goes right below. And you're off to the races. Or some will take this trade right here. Boom. 20 pips. Do I trade London or New York? I'm a London trader. So what I personally like to do is I like to spend 6 months out of the year in Europe. I go to Spain. I trade in Spain. So the other 6 months, I'll trade in the US. All right. So I'm back usually home during the holidays, end of the year. I got taxes to do and this and that. So I'm usually home by around Thanksgiving. And I usually leave around March. And then I'm there for 3 months. Then I come back for the summers, much nicer. Chores to do around the house, right? And then I'm off September and I come back in November. That's usually how I schedule it. Because I'm more of a London trader. So, hey, if I'm going to get my full night's sleep, I've structured it so that I will trade over there, London. Okay. Is it possible to get this recording? Yes. Doug is going to come in towards the end and tell you exactly how to get the recording and how to join BTMM. Okay. All right. Awesome. So yes, there is another entry in here. Okay. You know I like the out of the band, in the band move. So here's my out of the band, here's my in the band move. So I'm looking for my next move somewhere in here. Long. All right. All right. Let's go to the next one. EA. Brilliant trade. Comes off of this move. 1350 cross for first pullback. The 1 hour 50-50 bounce, which we're going to talk about a little bit more later on. All right. That was the presentation. Our focus for the next couple of months. This is how I am going to show you how to be a master of one setup at a time. Because we're going to focus on one setup at a time. All right. And you will make money. You will make money. All right. but it'll take time. It is not one of those, well, I'm going to attend one session and I'm going to get the Holy Grail, right? The material, all Steve's material is considered the Holy Grail, except you got to pick it into pieces and master one piece at a time. So if you notice, this is level 3, right? So you can short this move and then take this as a 1 hour 50-50 bounce long. All right. I nailed this one. This was easy. I was waiting for it. I knew it was coming hours before it even came. All right. Took the short on this one first. 1-1, advanced M. Boom. Turn right back around. 1 hour 50-50 bounce long. For those who are part of BTMM, they know exactly what I mean by that. That trade. Could you have taken this trade on the 15-minute chart? The answer is you could have. What are you looking for? You're looking for W of the Mayo. All right. Right. So if I'm looking for W of the Mayo, I require a out of the band in the band, which is right here, and R sign above the signal line, above the market baseline, which is right there. Price has got to be above the 13. Your entry is right there going long. Your stop is right here. First target, and so on and so forth. All there. Okay. In level 3, you can trade the W of the Mayo on the 15. All right. EN. Okay. So I was sitting in level 3. I'm looking for reasons to go short on this pair. All right. Reasons to go short. So I go to the 15-minute chart. I'm looking for some sort of a structure. All right. And they kind of sort of give it to you. I did not take this trade. Close below 13, back above, back below, right? So I'm looking for an out of the band, in the band move. So if the out of the band, in the band happened right over here, which is right over here, I'll be more interested in this trade. Okay. Obviously, I'm waiting for a nice shift candle. A shift candle is approximately 10% of ADR, or between 12 to 15 pips. So in this example, if ADR is 123, I'm looking for approximately a 12 pip candle. 12 to 15 pips is my shift candle, approximately, right? This is 20 pips, just as nice. If it's 25 pips, then I'm going to wait for the 50% pullback, right? Like I said, there's tons of material, all right? So this is not a shift candle. This is garbage. It's nothing. What does this mean? It means nothing to me. It did close below 13, so what? It didn't shift the zone, all right? This is the correct shift candle. Your correct entry is right there going short. Okay? In level 3, the only other trade going back long would be a W of the Mayo in here like this, which this is not. So this is not my trade for me to take. Okay? Next one. GU. So GU, I was sitting in level 3. I was looking for reasons to go long on this pair. So let's see. Coming off this this little anchor, it went approximately, so right here, I was at over 290 pips. Okay, sorry, 290. So it's approximately there, 304. So I'm right at the bottom. So I'm looking for longs. No shorts, longs, right? It did drop. All right, it did drop without me. I did not take this trade short. I was looking for reason to go long. So when I'm looking for reason to go long, I'm waiting for them to come into the stop and box. So if I'm not in a stop and box in London, I know it's a New York reversal. I know New York reversal is coming. Okay, so I'm not even going to attempt to go long anywhere in here unless I get my R band in the band and R signs above the market baseline. That's the only place where I'm looking for longs, right in here, man. I'm telling you exactly where to look for that long. This is an advanced W pattern. Your long is right there. Stop goes right below here. As long as you get 1-to-1 risk reward, take that trade. Right? First target is water, second target is Mayo. You will realize if you're part of BTMM that I always see the same thing. It's always the same thing. Okay? That's how you create consistency. If you're not consistent, look and see what you're doing. If you're doing something consistently, you know, like when you go to work, right? You've been doing the same thing for a long time. you become almost like a guru in what you do. It's because you've been doing the same thing consistently for a long period of time. All right. So in this example, I'm actually in 2, right? I kind of drew this box a little bit wacky, but if you measure from here to right around this area, it's about 290, right? Not 380. So I'm expecting to drop a little and then pull right back up. So I go to the 15. Can I take this short? The answer is yes, I can. I can trade both ways in this example, right? The question is, did I take this short? The answer is I did not. I did not take this trade short. Okay. Here's a London pattern move in here going short. Also, market baseline is below the static, right? So I prefer shorts. Okay. So what am I actually looking for? I'm looking for a range, long leg. So this was a pass for me. I did not take this trade. I did well today. Really, really nice. All right. But I know some people even do better, but that's okay. Right? My target, like everybody else's in this group, is 10% a week. That's it. So there was no trade in here for me. GC, it's brilliant, right? 1350 cross, first pullback, pop, right there. It's a 1 hour 50-50 bounce long. Now, okay, further news, you pass on the move. But it's there, right? That's the 1 hour 50-50 bounce. Could you have taken it on a lower time frame? You could. Okay. Notice I'm sitting in level 1. Level 1, I'm looking for a safety. A safety setup is one of the cleanest and the easiest setups to see because you're looking for a visible stop hunt along with a pattern. And it's usually a W of the Mayo right in here. The Mayo is right here. Notice the stop hunt box. We'll tell you what's going to happen. It'll come into the stop hunt box, 25 to 50 pips, like Steve talks about. He'll give you a structure. This is a W. The band in the band, like right we talked about. Price going to close above the market baseline right here. Put your stop right below here and you're gone. Boom. Okay. GA, same deal, man. 1350 cross, first pull back, boom, long. Only problem is the candle's too big on the 1 hour 50-50 bounce. Can you go to the lower time frame and take it? The answer is you can. Can you take this counter move? You can. You're looking for the other band in the band. RSI's got to go below the market baseline. That's the only thing. So over here, it does not interest me. The only time it'll interest me is right here. See, when this candle closes, RSI is clearly below the market baseline. You wait for that pullback, put your stop above, and you just pop them. Boom. Turns right back around, give you the 1 hour 50-50 bounce or a W off the Mayo, and you go long. I know, right? It can't be that simple. It is. Okay. There is no pattern here, so this is the pass for me. Unless you take a 1 hour 50-50 bounce. All right. So yeah, did I take this trade? The answer is yes, I did. I took it on the 15 minutes on a trap and break, right? GN, I did not take this trade, right? So it kind of, this is the level 2 counter move and then went long from here. So there, to me, there was nothing there. Okay. Now, if this one hits the Mayo and gives me a reversal pattern, I'll be all over it. Because I'll be looking in level 2, we're looking for W's off the Mayo. Level 1, we're looking for safeties. Level 3, we're looking for a reversal and or a W off the Mayo. And then along the way, you have water bounces, which is London patterns and stuff like that. So there's a lot of opportunities to trade. Okay. See, right here, the 1 hour harmonic. It failed. It went right through it. That means on the 15-minute chart, there was no pattern to find. So I'm in 2. I'm looking for it to go drop into a level 3. So I'll be looking for a reason to go short on this pair. Okay. This is ugly, right? This is ugly to me. I know some people took this trade. I did not. All right. It's almost like a M of the Mayo, but it's just not as cleanest of things. So that's a pass. There's a counter move in here. You got advanced W in here, right? But this candle is too high. Now this candle closed right here. Stop goes below this low, and I got 19 pips. I'll take that trade. Okay, so I got a 1 hour, a 1 hour harmonic. So I'm looking for a 15-minute pattern in here. You're like, that doesn't look like anything. It doesn't. It's TDI. It's called an advanced W. Okay. Aussie, same thing. I'm coming into a level 3, so I'm looking for a reason to go long on this pair. All right, so you got your out of the band, in the band. RSI goes above the market baseline. Price got to close above the 13. So it doesn't really matter with all this stuff until price closes above the 13. Then you go long. Right. I know there's no M of the Mayo because price got to touch the water for it to create an M of the Mayo in level 3, trading back into the first leg. So in other words, I'll find one leg here. They'll come in, they'll bounce, and they'll give him a second leg. Okay. Nothing there. NU, nothing as well. I'm looking for a reversal long in here. There's nothing much going on. Even if you went to the 15-minute chart, yes, there are 15-minute entries called 12, 21, and 22s, which you don't have. In other words, you're going to get a first leg over here on the previous day, and then you're looking for a W structure today, which obviously there was nothing on the previous day, so I'm not looking for anything today. All right. Dollar Swiss. So I'm sitting in level 3. I'm looking for a reason to go short on this pair, right? Or I'm looking for W of the Mayo on the 15 to go long over here. So if I'm looking up here, I'm looking for a structure right on that blue tracer. I'm looking for some sort of a pattern right on the blue tracer, right? So when I come in, I start seeing this kind of stuff, right? So I see it here, it got wicks to the high, comes back down, comes back. Once it does almost like a shoulder head, shoulderish structure, unless it's really clean, I'm going to pass. This is not clean to me. Market baseline is pointing down, so it's kind of telling me, hey, I'm going to go short, but it's not the cleanest of patterns. All right. You'll understand when you actually listen to my lecture on 12, 21, 22s, what a clean pattern is. Okay. Dollar CAD. All right. So dollar CAD, I'm looking for longs. I'm in level 2, right? So in level 2, I'm looking for either a W of the Mayo, which is going to be a water bounce on the 1 hour chart, or I'm looking for a continuation trade, which is AR or an ID move, right? So I come in here and I'm looking for an AR or an ID, right? AR does not require an anchor. Anchors are, you guys know what it is, a W of the Mayo or a safety trade, right? AR does not require that. So when they induce out of the Asian box and they bounce here, I'm looking for a reason to go long, right? When TDI confirms, right? So this does not close above the 13. It closed right on the 13. Now, if you consider that to be a close above the 13, let's presume this one closed above the 13. TDI qualifications got either bounce or trap of the static, or sent above the signal line above the static, which is correct. So your entry would be right there going long. Notice price never closed below 13, and that would be your TP. This white box. Okay, that'll be a move, 30 pips. So that's a nice AR move. Boom. All right. Then use breakout traders. They come back in, bounce off the water. TDI will confirm by bouncing or trapping off the static, and then off to the races. All right, AR means Asian range, the inducement of the Asian range. All right. Yep, it's all part of the setup. It's all part of a rule-based setup. All right. UJ, I'm in 3, so I'm looking for a reason to go short on this pair. Right. I can see right off the bat that if I'm looking for shorts, I'm looking for shorts off the high of the structure, not in the middle of this range. So even though this creates a little M of the blueberry short, I would not be interested in it because it's too choppy in here. I don't know which one's going to work. So the better trade is no trade. All right. And finally, Euro pound coming to a level 3. I look for a reason to go short on this pair. And of course, it moves based on news. So I'm passing on that move. All right. That's why I don't trade these. I mean, do they look nice sometimes? Yeah, it does. Right. Here's my 1350 cross. Boom. First pullback. That'll be a move right in there. First leg. Here's your second leg move long. Is there a setup here? The answer is yeah, it is. It's called the W of the male. Right. So there's a certain structure in place where you know what you're looking for at any given point in the cycle. Your job is to study it. Learn what it is. Homework is study it. Right. Jim has the WSM viewer. And Doug has the homework helper. And I just use the strategy tester. That's it. I just play with that all the time. You got to test yourself to make sure that you know what's going on. You can't just think about it this way, right? Market makers are what? They're professionals. They've been doing this for years, right? So before they become the man, right, they have to be an apprentice. The average time for an apprentice is approximately 5 years, 10,000 hours. So you become an apprentice, or junior apprentice for at least 5 years while you're learning under the tutelage of the master, the market maker. How do you think you're going to compete against somebody that has 10,000 hours as a junior market maker and then more than 10,000 hours as a professional? How do you think you're going to compete against them if you don't know, A, what to do, B, have this almost the same amount of hours that they put in? That means they were hungry, right? They really wanted it. That's why you're here. You're hungry. You want it. And that's good. That's a really good thing, right? The company invested in the junior market maker 5 years. They got to pay him a salary because he's not doing all the stuff that the market maker is doing, right? So they got to pay him a salary. They invest in the guy, right? Your investment in yourself is your education. In order to compete against people that are professionals, you have to be a professional. You have to put in the time. You have to get the right education. And you have to know what they know. So you have to sit and look at the chart objectively and be like, all right, so how do I know this is going to go long? How do I know this is going to go short? Guess what? We're going to tell you when, how, and how to execute. Now, based on my research on studying and 10,000 hours or more of homework, the rules I use are obviously tested and 80% or more in terms of accuracy. Ask any of the students that have actually taken it. Nothing is 100%, and things do move in clusters. So in other words, hey, I got stopped out on this trade, man. Next one has to work. No, it comes in clusters. You can get 5 right, 7 right, 10 right, and be wrong 3 in a row. Happens. All right. All right, so let's continue forward a little bit more. Let's talk about the 1 hour 50-50 bounce, right? At least you walk away with something. That's one of my favorite setups. This is the first setup, and that's the setup we're going to focus on for the next 3 months here, because I want you guys to know one setup. I want you to master. This is the first setup we're going to master. Okay? The easiest thing to see, and there are a lot of nuances to this. What I'm going to show you is just the basics of it. All right, there's a lot of variation to the theme, little nuances, how it can kind of look slightly different. Same thing, slightly different. All right. Okay, so really in the core of this is called the first pullback, right? So in other words, I'm waiting for the 1350 to cross. I'm waiting for the first pullback, got to hit the water, and price got to close above the 13. And TDI got to bounce the trap of the static 50. The static 50, just the middle line on the TDI, it's going to bounce the trap. So this is considered a trap. It goes below and comes back above, right? The market baseline got to be, if I'm going long, the market baseline is got to be above the static. Okay. So in this example, 1350 cross, first pullback, bounces. All right. And I'm looking for a reason to go long from here like this. Boom. That'll be my move. Can this be used across all time frames? The answer is yes. It works the same way across all time frames. So 1350 cross, first pullback. Now, if it misses the static, it cannot miss by more than 2. So I'm going to measure from the highest point to the static, and that number, the middle number, cannot be more than 2. Happens to be 0.58. Okay, so I'll look for reason to go short in here like this. Boom. All right, price did not close below the 13, and it continues on and so on and so forth. It'll hit 50 pips before it close back and gives you plus 20. All right, so does it happen on the daily? Answer, yes, sure, absolutely. Right, 1350 cross, first pullback. Now, daily, this number is going to be much larger. It's going to be, because 4 hour and daily is about 3. The distance from here to here is about 3. All right, so it's smaller and smaller as it goes smaller time frame. 15 minutes is 1.5. 1 hour is 2. 4 hours between 2 and 3, right? And then the daily is 3. So the distance from here to here is about 3. And then that'll be a move. Boom. So there you have it. Piece of cake, right? I'm looking for 1350 to cross. Market baseline to be on the right side of the static. This is very close, perfect. I'm going to nail this one too. Boom, 150 pips. All right. Simplest thing there is ever. That in it in a nutshell. I'm kidding. I'm going to show you more example. Right, you're here. Why not? See? So here's my anchor, W of the Mayo, 1350 cross, first pullback. Right, so it pulled back here, but it never closed above the 13 until here. Market baseline is on the correct side of the static. If I'm looking for long, that means it's got to be above it. The key pieces are assigned above the sig line, above the static. Right, and price got to be on the right side of 13. So just because the RSI sig line crosses right here, doesn't mean I'm going to execute my trade in here. Right, I got to wait for price to close on the right side of the 13, and RSI got to be above the red line above the static right there. So that's where I'm going to execute my trade going long. Boom. Okay. So the question then is, here, is that my 50-50 bound going short? The answer is no. Notice where the 13 is. 13 is above. Right? So that cannot be my 50-50 bounce. Okay. Here is your 50-50 bounce. So this one comes back above. There is no 50-50 bounce in here. More like a head and shoulders, right? Shoulder, head, shoulders move. What about here? The answer is no. Market baseline is on the correct side. What about here? Your 13 is still above the water. Your 13 has to be below the water. So the only qualifying area is right here. So you measure from here to here, right? The 1 hour chart cannot be more than 2. This one is like 1. Wait for the pullback and it's short. Boom. All right. Here's another example. So 1350 crosses right there. Market baseline is on the correct side, right? So here's my first leg. So that's my first bounce. That is correct. RSI is above the sig line, above the static, so I'm going to execute my trade right there. Why? Because I have no idea it's going to come back down, so I'm going to take it. So I'm execute, it comes back down and close below 13. I kill, minus 5 pips. I also understand that sometimes they'll give me my second leg. Does the second leg have touched the water? The answer is no, it does not. It just needs to go below the 13 and come back above. So where's my next entry right there? I just have to make sure RSI is above the signal line, above the static. Next execution is right there, and it goes to the moon. Okay. All right. Simplest of setups. There are nuances to that. There are some variation. I just showed you the basic of it. All right. I'm just showing you the very basics of it. Okay. Let's look at one or two more examples, and then we're done. M of the Mayo. Here's your anchor, 1350 cross, first pullback. Measure. 1.5. Perfect. It shifts, short. Boom. Excuse me. As you can see, the ADRs are kind of tiny, so you're not going to get a lot of moves out of it. Comes off the anchor, 1350 cross. Trapped is beautiful. RSI below, signal line below the static. Price close below, boom, short. Same move, right? The question is, can you sit and wait for it? All right, so in terms of educational material and stuff, I am actually done. I'm really hoping that most of you guys will join us as we journey through this material along with for the next couple of months. It'll allow you to focus on one thing. Hey, listen, you want to be a master of one. You don't want to be a jack of all trades, right? You want to be a master of one, and that's what we're here for. We're going to focus on 3 months of this, show you guys variations to the theme, variations on the 1 hour 50-50 bounces. Okay, you just saw one variation, there are others. All right, that way you can look at it, understand it, get all the rules down, focus on it, and then we'll move on to the next one. Okay, by the end of the year, you will definitely have 3 setups ready for you, all part of BTMM package and part of the DMR, the daily market review. All right. Let me see if there's any questions in here. Ang, thanks a lot, bud. I've seen you before. Yep, listen, mine is all rule-based, man. That's the only way. You gotta remember, my background is in accounting. So I like a structure. And then when you have a structure, you have to kind of figure out what works most of the time, otherwise the structure is useless, right? So then you focus on, hey, I'm studying at this is my hypothesis, and then you go back and you homework it, and you make sure the thing is at least 80% or more accurate. All right, that's where the variation to the theme comes in. You cannot sit here and be like, expect. It's like a machine shop expecting to make nuts or bolts or whatever it is, where you just plug it in and it does the same thing. The computer will just do the same thing for you. This is a dynamic market. We're trying to create a structure within the dynamic market. It's not as easy, but it can be done, and it has been done. All right. So here we are. All right. Hey, Ali, how you doing, buddy? Jen, thank you. Masood, what's your name? My name is Carr. All right. Yep. Great. Zeev, how you doing, buddy? Yep. Okay, when you put on a trade, do you just set the profit target and stop and then walk away, or do you watch the trade till fruition? I actually look at, it's kind of funny. I actually started looking at YouTube and Yahoo News and all that kind of stuff, but I do peek at it every 15 minutes. I usually trade the 15-minute chart. So that way I don't get itchy fingers and close position thinking that, oh, it's going to do this, it's going to do that. You know what? You don't know that. You do not know that the market's going to do this or do that. You trade your set, man. That's all you can do. You trade your setup. That's why I preach A, you trade your set. B, you trade percentage of accounts. C, you lock in your targets. You lock in saying, hey, this is where I'm going to take TP, this is where I'm going to take TP, right? Different styles, right? Sometimes I tell people that like to let things run, take 80% off at your target and let 20% run, move your stop to break even. It's a free trade, okay? You don't know how far it's going to run. And do not tell yourself, oh, market's going to definitely do this, because you know what? It doesn't have to do anything. It's going to do what's going to do. Your job is to identify it on the hard right edge, what they're going to do, their footprint, and then just follow it. That's it. That's all you can do. Okay? The pain comes when you think it's going to do something and it doesn't do. Then now you're wrong. So now what do? Like, damn, I'm wrong. I thought it's going to do this. It didn't do it. Right? Don't do that. That's going to mess your psyche up. It's going to mess your mojo up. Trade your set, man. You become so robotic. That's why you read some books like, oh, trading is supposed to be boring. And you're sitting there and thinking, no, it's not. This is crazy. It's going up, it's down. I'm excited one moment. I'm pissed off the next moment. Your emotions are in play. It's not supposed to be like that. It's supposed to be like, I'm looking for this, the 1 hour 50-50 bounce. And there are people that actually purely trade that. I have people that are doing so well, professionals, lawyers, man, nailing 5 to 8% a week, taking 3 to 5 trades a week, working a full-time profession. All right. There are tools out there that'll wake you up. That'll send you alarms and be like, hey, there are tools that'll tell you prices come to a certain price zone. Wake up. Time to look at the charts. It'll send you an alarm. Yeah, I know you don't know. Some people know, some people don't. There are tools that'll tell you when to look at charts. If you're out and you set the alarm for yourself and that damn alarm goes off, guess what you're doing? You're like, all right, cool, man. Hold that beer for me. I'm going to go come back in a couple of minutes. You're looking for an Asian trade. You're out getting drinks. This happens to be a Wednesday evening. Your best friend's in town. Run to the car, open up your laptop, get ready to go. Price is right there. You're waiting for it. You know it's coming. That level of confidence, that level of know-how. All right. Yeah, Masood. Yep, you've been around for a long time, bro. Time to get back into it. Do you have the video in the H1 50-50 bounce? Absolutely. It's part of the BTM package, of course. There's not only one video, man. There's like tons of videos. All right. Doug is going to be on this coming Sunday, but I'm going to join him this Sunday. We'll talk about our journey, where we were, where we are, what we're doing, how we got there. Okay. Good stuff. Does the strategy work on all pairs? The answer is absolutely it does. It's not biased, man. It doesn't be like, oh, well, I don't like Aussie pairs. I'm not going to work. No, it'll work on every pair. I mean, I'm showing you some really crappy pairs, right? Aussie CAD. I mean, geez, happens here. 1350 cross, first pull back, boom, long. You're not, again, ADR 62 pips. You're not going to get 50 pips move out of it, but it does work. Stay move. You wait for the 1350 to cross. Make sure the market baseline is on the right side, and you pop them. That's it. All right, so here, right here, boom, short. All over. Tell us about Egypt next time. Yep, Michael is saying, hey, if they really want to learn how to master Forex, they will join. Thanks, Michael. Good to see you, buddy. Best money I ever spent. I know Michael's been doing really well, averaging about 10% a week. So just put in the numbers, man. Put in the numbers. You're trading $30,000. 10% a week is $3,000. You're trading 20,000. 10% of the week is $2,000. All right. Awesome. Hey, Tammy, how you doing? All right, good. I'm going to let you guys go. All right. Thanks for joining the session. It was fun. I always enjoy this stuff anyway, but I know Jeff is saying, you newbies are so lucky. Yep, we had to go through this, man. We had to look at this stuff and come up with all these rules and stuff like that, but that's good. We could continue on Sunday. All right, right after this, I am going to do the pre-market for tomorrow. All right, so let's pause. They'll give Doug a chance to stop and then continue. All right, Doug, I'm gonna, what do I do?
Sorry, I had to unmute several things. You're actually just going to close out and restart. Everybody, you just join back up with the same link you used to get in tonight and every other night during the week.
Yeah, do you want to quickly talk about how people can join BTMM?
Yes.
Since I didn't.
Look, you just need to send an email to info@beatthemarketmaker.com. That's IN as in Nancy, F as in Frank, O @beatthemarketmaker.com. And I'll send you all the details, okay? All the details will be in there. Just to answer a couple other questions that ran through about memberships and the videos. These videos will not be available for non-members. I'm sorry, that's just the way we have to run things. Theft is rampant out there, and people spread them all around. They will be available for non-DMR members in the membership forum. If you're actually a member of Steve's, but you're not a member of the DMR, these will be available to you in the actual member forum. So, yeah, sorry about that. I know that's disappointing, but one good bit of news in that regard is that Steve will be posting his recorded session from this week to his Facebook page. So keep an eye open for that. And one last bit of news. We do have a new session out on Saturday, just this once for the open house. It's a breakout session. Our good buddy Jim is going to be showcasing the WSM, the Weekend Study Module viewer for you. It's 8 p.m. Eastern to 8:20 p.m. And he'll be going over how he uses it, how you can use it. He's not, going to be teaching you what to do, like how to actually operate it. He's going to show you all the features and, run through the benefits and all the bells and whistles. Okay. So it's going to be very cool. So don't miss that. All right. And that's it. So Carr's just going to close this out and then he's going to reopen.
Okay. All right. I'll see you guys in a couple of seconds.